Welcome to Chart Detective, where our goal is to let the charts speak for themselves. In today's presentation, we'll be looking at the Spot Junior Uranium Miner ETF, URNJ. Currently, this ETF is trading at a 52-week low as of Friday, February 28th, where it closed. So let's take a look at some of its holdings. So last time this was updated was February 27th, and number one holding is Paladin Energy. I believe this is an Australian company, and the weight of that stock in the ETF is 13.89%. And this is very important because this company is traded over the counter, so this is highly speculative. So if you're not into speculating into the uranium market to buy those speculative stocks, you could buy the ETF because you could get exposure by buying the URNJ ETF. Next, we see Denison. This stock is traded in the US under the ticker symbol DNN, I believe, and it makes up about 10.23% of URNJ. Next, we have Bass Energy, make up about 6%, and Deep Yellow make up roughly 5.65%. We have more, you can look them up if you want, but we just want to let you know some of the holdings that are found in the ETF. Now, we have said that this ETF is trading at its 52-week low. Why would we want to buy it? One of our philosophy on this channel is that we follow what Warren Buffett said. Be fearful when others are greedy, and be greedy when others are fearful. Meaning that when there is irrational exuberance or when people are crazy buying stocks or ETF left and right, we are careful. We do not want to buy when everybody's buying. But when they're selling, they're being irrational by selling everything, especially uranium stocks where the fundamentals are very strong and we can see that the stocks and the ETFs are going down. It's an indication for us to be buying. So, in other words, if we were to summarize what Warren Buffett had said, is that we should be contrarian. So, this is the philosophy we follow in this channel. We are contrarian. So, investors are selling uranium left and right, so we are buying them. And not only that, because of ESG mandates, most institutional investors have not been investing in uranium. And we think that many of them will be stepping in to be buying. All right, so let's move on to start looking at the charts. So this ETF is fairly new. Started trading about 2 years ago in February 2023. So from there, the bears took over and dragged the price down all the way to 1366. And that was a 40% drawdown right at the gate. Right, making an all-time low at 1366. From there, the bulls took over and move up by about 125%, all the way up to about $31.30, where the ETF made an all-time high. After that, the bears took over and bring the price down by about 47%. The bulls came back, pushed the price up by 63%, and from there, in October, price has been going down by roughly 40% since October 2024 up to today. The ETF has been trading down by about 40%. So currently, as of Friday, February 28th, 2025, price is $15.17, and this is a 52-week low. If the price was to move down by about 13%, it would take us down to the all-time low, which was set in March 2023 at $13.66. So if the ETF was to go down to that level, that would be a great buying opportunity. Let's take a look at how the ETF did in 2024. 2024 was not a good year. While the stock market was doing well, this ETF was trading down by about 20%. I think the S&P 500 was up about 25%, Nasdaq was up by about 35%, and this ETF was down. So we think the trend might be reversing soon. Now let's take a look what has been happening so far this year. Initially, price went up by about 20%. That was short-lived because the bear took over and dragged the price down by 30%. And right there, we have a long-legged doji, which is an indication that the trend might be reversing, but we're not absolutely sure. So that's one indication. So we have other signals that could tell us if the price might be going in the opposite direction soon. So I'm going to bring up the same chart again, but this time I'm going to look at it from a long-term perspective. So we look at it from from February 2023 when the ETF first started trading, all the way to the last price to when the price closed on Friday, February 28th at $15.77, where we had the Doji. If you look carefully, in March 2023, the all-time low was made there. In April, there was another low. And in June, there was another low that was made. And if we were to connect all of these lows together, it will take us all the way to the closing on Friday where we had formed the Doji. Let's take a look. See that trend line? So that's a strong support. So this is an indication that price may not fall down any further, even though we know that it could go down to its all-time low, but we think we have a strong support sitting right there. So let's take a closer look. We still have the support line there at the Doji, which we just showed you. From there, we think price may revisit the low that was made on Friday at $15.26. And not only that, we have another support line right there. So we have three indications that price may move higher from there. So we have the Doji, and then we have those two support lines. So it's likely that the bulls may step in and bring the price higher to $16.50 and stop right there because we have resistance at this level. The bears may step in and bring the price down at about $14.50, and they may drag it even further down if bearish sentiment is very strong. So the bears may drag the price down to the all-time low at $13.66, which we have seen before. right there, and we would have strong support there, and we do not think that price would move any further down from there. But we don't think this is what may happen. So this is a bearish scenario. We think the likelihood of this happening is between maybe 10 to 20%. We think price should move higher from where it closed on Friday. So let's take a look at that. So price may move a little down like we had seen before and meet support. From there, the bulls will take over and move the price to $17 where we have resistance. We may experience a short pullback and stop right there at this support level. And from there, we think price should move higher to about $17.50 where we have another resistance. So price has to break this resistance line in order to move higher to about $20. So we will stop right here, and then if price move to that level, we'll revisit the ETF and tell you what may happen again. So this is all we have for you for today. Please remember to like, subscribe, and share, and use the comment section to let us know if you have found our presentation to be useful.